Hey guys, how you all doing? I wanted to record the training for tonight because not everyone is going to be able to get on or has made it on. So what I'm going to do is I'm going to share my screen, go through some of the training. That way, for those of you who haven't made it or who have already dropped me a line to say that you're busy, you're caught up, and you're not going to be able to get there, then you can watch this in your own time. So let me try and get the share screen happening. Okay, that should be pretty good. Righto. So hopefully what you can see on the screen. There we go. There we go. So you should have that now on your screen. So what I'm going to go through tonight, and it won't take long. I really want to get this covered in, maybe 10 minutes or so I can keep the recording light for you. You can watch it and listen to it down the track as well. But I specifically wanted to touch base really quickly on profit performance. So we've currently, as this recording is being made, we've moved into a new financial year. And I'm looking back on what's happened in the last financial year, not only for my own companies. There's 4 that I'm keeping track of, but also other companies, businesses, and personal assets for my one-on-one clients, and also some of the guys in our general finance and investment purpose group. And one of the key things that is so important to remember to do, and I've got to say, I think this gets a little bit of lip service, and that's focusing on profit performance. And let me be really clear about what I mean by that. How the hell do you know if what you're owning is actually doing you any favors? How do you know if you've got a lemon or not? How do you know if you should be getting rid of some of the assets? Do you need to change the way that your business is functioning? What is your cash flow doing? Are you building up equity? Are you putting stuff in retirement? What's happening with your super? Are you reducing debt? All of these different moving parts. And if you're not measuring, if you are not tracking this stuff, how do you know if it's working? How do you know if the profits you have, the equity, the assets, the businesses are giving you the results that you want? Okay. Now, again, in that last little sentence, there was a key hint right there about another thing that you should be doing, and that is, what is the results that you want? You've got to be really clear as to what the results are. And if you don't, you need to fix that. You need to make sure that you've got a strategy and a plan. Again, this is the stuff that I get to do every day. Make sure you know what your strategies and your objectives are, and you align them with your personal lifestyle. You align them with your own values. You align them with the things that are important to you, not what your neighbors are doing, or not what you've seen on social media, or not what you read at some book or heard at some event. What fills your heart up? What makes you happy? So let's get into some more of this stuff, and that's profit performance. So within profit performance, I want you to make sure that, well, here we go. This is my little reminder. As you go through this, get rid of your WMDs. I call that the weapons of mass distraction, righto? And I already started alluding to it. One of the biggest problems with profit performance is that there is no plan. There is no tracking. There is no measuring. And again, for those who are in that one-on-one program, and again, also for the guys that have done the online course, you'll know clearly that the Intelligent Investing Blueprint is all about that systemized 3-step process: map, move, measure. And what's that last one? Measure. The last one is measure. And if you're not measuring, how do you know if you're getting what you need? Okay, you've got to be able to track it. Now, one of the questions I asked earlier, and again, for those of you who are listening to this recording, I've actually had some feedback. So some of you have actually bothered to get off your ass and actually put a little bit of effort into this. And the 2 questions I asked was, what is one thing you are grateful for achieving last financial year? So essentially, you can do this anytime and get rid of the financial year and just say, what is one thing that you're grateful for achieving in the last 12 months? And then ask yourself, what is one obstacle or challenge that you'd like to learn, overcome in the next financial year or in the next 12 months? Okay. So Write that down, comment, jump on into the group. Okay, you can post this stuff in the Investing with Purpose Facebook group. You can send me an email. You can PM me. Several people have PM me already, and I want to have a call out and thank you for that. Gab, I've got yours. Lisa, I've got yours. Justin, I've got yours. So thank you for those guys who've already sent stuff in. But ask yourself, what are you grateful that you have achieved in the last 12 months? And what is one challenge that you'd like to learn more about how to overcome, how to solve in the next 12 months? Whatever that is, let me know and I'll help you out with it. Okay. So recording. Yep. It's a record. The thing that most people fail in profit performance is recording. You don't record anything. You don't track. You don't measure anything. Okay. It's that record. Your record is that metaphor. You're going round and round and round and round. There's some kind of a music playing, but essentially at some point, you're going to get to the end of that record. It's going to be finished. What are you going to be left with? So you need to make sure that you understand why you started in the first place and you've recorded it as you go. Correct data and knowledge can be summarized as crap in, crap out. Okay? If you are not diligent with this stuff, then you can go months, you can go years, and you don't actually know the details behind your finances and your investments. Again, I know that there are some of you out there who have not done tax returns properly in several years, as I've met. Okay, you own properties, you own share portfolios, you've got managed funds, you're looking at bonds, you're looking at returns in your superannuation, maybe through a retail or industry fund. And when I've asked the question, what's your return been in the last 12 months, over the last 3 to 5 years, I often get this blank look. I don't know. You're not tracking it. So how do you know if it's serving you? How do you know if it's doing the right thing? So you need to make sure you track this. And if you don't like doing all of the details of tracking all the little numbers stuff, get someone else to do it for you. Okay. I know how important it is. I analyze this stuff. Here's the secret. I don't collate it all. Okay. I got a bookkeeper to do all that. Okay. And she collates the data. She provides reports every quarter. I get P&Ls from all the different companies. I have balance sheets from all the companies. Prior to the end of the financial year, I plan equity, trust distributions, profit alignment, tax planning, but I can always track every 90 days where our funds are at, what profits are at, what liabilities do we have, what's working, what's not working, do we need to tweak somewhere? It's done. We're looking, you've got to understand this stuff, okay? You've got to be able to measure it, okay? And this is why I keep saying, how do you know if your investments are working if you're not measuring? And you've really got to understand, as I said on the second point, and I've done another training on this one, so go back and check this one, the importance of cash flow management versus debt management. They are two different things, okay? Not four different things, they are two different things. The importance of cash flow management and debt management. Two different things. One is about understanding what should be routinely and regularly coming in through your business or your investments. The other one is understanding how you manage your debt. Are you reducing it? Are you increasing it? Are you holding it neutral? What is the effect of rising interest rates? When a repayment's due? What's happening with the asset? You've got to understand how you're going to manage the debt. And sometimes that can be as simple as understanding how debt works. Okay. And that could be a psychological management that you have to do. Okay. The types of programs you use, there is a gazillion types of software out there. Don't try and do it all on an Excel spreadsheet. Okay. Don't just try and record it all in a book. Get it down on paper. Get it down in a system. Get it in the cloud is even better. My favorite is Xero. We do everything in Xero. We can record receipts in Xero. You know, if I go out, for example, as I caught up with some clients today, had lunch, grabbed a copy of the business receipt, grabbed my phone, took a photo of the receipt, and I pushed one button and bang, it was automatically uploaded, coded into the system, threw the receipt away. Don't have to keep paperwork. You've got to have a system that records that stuff so you know what you're looking for. You've got to be able to understand balance sheets and profit and loss statements. Now, here's the thing. If you are not running your finances and investments through a company, I would encourage you that you still need to know this stuff. Treat your managed funds, your shares, your investment portfolio, if investment properties in your own name, as a business. So you need to understand, balance sheet stuff. What are my assets worth? What are the linked liabilities? What is credits outstanding? Do I have a shortfall? You need to be looking at your income and expenses. What income's coming in? What expenses do I have? Track your expenses. Monitor your expenses so you understand a combination of gross profit and net profit. Okay, and all this stuff links back to things like understanding your servicing from a lending perspective. It helps you understand accessible equity. What accessible equity do you have? What accessible equity do you need? How can you generate extra accessible equity? What's happening within your business? Have you got the right business structures? What stuff needs to be consolidated? What tax planning do you need to have? So you can make sure that this is tracked properly. Okay. And the other thing you need to understand is, when do you manage this? How do you manage it? Well, I've given you a couple of ideas on the screen right now. Okay, you can measure this and track this annually, quarterly, or monthly. I think annually is way too long. If you only measure this stuff every year, then you've essentially got 364 other days in which you've stuffed it up and you're only looking at it in one day. Monthly can almost be too frequent, but this is where it depends what you're measuring every month. Businesses absolutely should be looking at stuff every 30 days. Things that have a routine, like a monthly income turnover or expense turnover, absolutely you want to be looking at that monthly. For most short, medium, and longer term investment holds, quarterly works really well. Why quarterly? You've got BAS returns that are done quarterly. 90-day targets are proven to work really well. Do your stuff every 90 days in accordance with quarterly financial quarters. That is a great way to analyze it. The other way that you can look at it, other than time frame, or in addition to time frame, is one other way is, and I'll put it on the screen. So if you look at the screen, you'll see the fourth point down, budget versus actual. You need to be able to measure what have you budgeted versus what is actually happening. What have you planned to generate as income, or what do you expect to have as expenses versus what is actually occurring? Okay, what is actually occurring, and see, is there a percentage shift or a monetary shift up or down? If so, why? And what's the impact? The third type of thing that you want to measure is be able to measure your investment performance, finances, cash flow, and debt via asset and ownership. So what I mean by that is, look at, for example, if you have an investment portfolio that has some investment properties in it, it has some shares in it, then you want to be able to look at these by asset class. So how are the properties doing? How are the shares doing? Then break them down into individual assets. How is this property doing? How is this property doing? How is this share doing? How is this managed fund doing? And break it into individual assets. Then you can look at grouped assets by ownership. So again, you might have a property and some shares and some other business stuff in one entity. For example, a company in trust, or a company, or your super fund. So you look at your entity by ownership. You might want to look at assets and liabilities you have in your own personal name, your partner's personal name. Like I said, your self-managed super funds ownership. So look at your performance, your profit performance by individual asset, by grouped asset, and by ownership. Look at budget versus actual. And then I would suggest time-wise, you go through this at least quarterly. Okay, at least quarterly. You've got to measure this stuff, team. You have to. If you don't measure it, it's how do you know if you're getting anywhere? It just blows my mind the amount of people that will spend so much time researching an opportunity, then they'll get into it and they get busy doing stuff, but they're not actually sitting back going, is this working? Am I getting the results that I originally set out to do? Okay, and the problem often is they often haven't actually set results up front. And that's why you've really got to make sure you set that. Here are some quick examples as we wind up the recording for you, is understanding what is the kind of investment details you need to track? Okay, so I've given some examples: rent renewal, insurance renewal, lease expiry, property manager details, inspection due dates. Okay, you might include things like dividend distributions. You might include interest payments. You might want to include reviews of loan agreements, whatever that's going to be. You track that investment detail. Again, I have a sheet. Well, again, my bookkeeper has a sheet with all of this stuff in columns, all with all dates on it. She even then goes to the point where it's loaded up into the calendar. So we know, or I know, in advance when a rent renewal is done. I know when a quarterly inspection is due. I know when a dividend payment's done. I know when I need to go and discuss new loan terms. And if things aren't done, for example, an inspection, I know I've got the property manager's details there. I don't have to rifle through paperwork to try and go, who's my property manager and what's their phone number? And I actually get someone else to check in for me to go, why is this quarterly inspection not done? Or where are the results of it, or whatever that's going to be. The kind of paperwork you need to keep, be aware that there is stuff you need to keep for the tax office, your accountant. If you want to claim deductions, you want to look at capital expenses versus repair and maintenance, contracts of sale, purchase costs, sale costs as well. Understand again that when you're looking at funding and leverage, what banks are after, the information the banks are after is different to what the tax office is after. Okay. Tax office is really focused on the purpose of why you've used funds, whereas the banks want to know what you have used the funds for, okay, what you've used the funds for. So they're all about the security of the asset. ATO is all about how did you derive that asset. So again, understand the differences and the nuances in that. Bottom line, team, the bottom line is your cash, is the revenue, is the net profits that you've got, is the equity that you're building serving you. That's it. That's where the rubber stops. Because if it's not, then what you're doing is you're setting yourself up for failure. You can build something really sexy, but it potentially could come crashing down like a house of cards because you haven't spent the time to either develop your plan or to put in track measurement systems. You've got to be able to measure your profit performance. Okay. I hope that's made some sense. I know it was short and sweet, and that was the intention of the recording, to keep it short and sweet. It needs to be punchy and to the point. But here's the thing, as the last slide says, get out and do something about it. If you're sitting there listening to that going, holy crap, I really don't know where I'm at. I haven't been tracking stuff well enough. I don't know what my superannuation returns have been. So am I actually in the right super funds? Is it managing properties? Should I have an SMSF? Should I not have an SMSF? What's happening with my investment properties? Do I need a rent renewal? Shares, business income? Have I got the structure set up? Am I paying too much tax? How am I reducing my personal debt? Am I getting rid of my mortgage? What am I doing to set up education fund for the kids? Have I got enough funds to go on a holiday? This is the stuff that you need to plan. This is the stuff that I'll work with you on building up your strategy on. And then you've got to be able to measure it to make sure that what you're achieving is what you actually want to get. And you align them. You align your finance strategy with your lifestyle strategy. Righto, team, that's been it. Take it easy. And I know I'll be catching up with you again later. If any of you have any questions at all, PM me on Facebook. Make a comment in the group. Send me a direct email. You should all have my direct email address. Call me if you need to call me. Send me a text. There's plenty of ways in which you can ask for and reach out for help. I am more than happy to give it to you. Righto. Take it easy, guys. Bye now.